It's only taken Bitcoin 11 days to get double-digit gains on the board. It is breaking out of resistance levels, putting in checks along the way to almost confirm us a blow off top is on the cards. Now, I know that's pretty early on to suggest that, so I want to go through some data, in particular, some good old-fashioned technical analysis on major timeframes here. I'm talking the monthlies and the quarterly charts for Bitcoin. We're also going to look at ETH and Solana. Along with that, the traditional markets, as this is your home of macro cycle analysis covering Bitcoin, stocks, crypto, and the real estate cycle. You're joining me, Jason Pizzino, right here on the channel. So if you are new, make sure you hit that subscribe button. And also, guys, joining for multiple times now, well, regular viewers, smash up the likes. Let's go for 3,000 on today's video. Now, I've got a major sale coming out next week for our Financial Freedom Masterclasses, our 3-part series in TIA Premium. If you want to be on board with that sale when it goes live, just use this link in the top of the video description, name and email, and you'll be notified when that goes live very, very soon. Let's kick it off with some of the data from the traditional markets with the S&P 500. Couple of major things that have been circling the headlines of late. One being breadth, which just means that there are fewer stocks pushing the market higher, but things are changing with more of those shitcoin stocks pushing the market up now. Now, we need to get into that in terms of the data itself and what that means to the overall cycle, what that means to the market, and of course, how that affects Bitcoin and crypto. And the other thing is the S&P overbought on every time frame, meaning the RSI, the relative strength index, seems to be far too high on all of the time frames here. You can see right here it's saying the index on the daily, the weekly, the monthly, the quarterly, and the yearly time frames is above 70 on all time frames. So what has this meant to the S&P 500? Are we about to experience some sort of major correction? I really don't want to be suggesting that because, well, we've seen what's happened to the S&P 500 over the last year and a half, coming up to 2 years. There have been corrections, barely double-digit corrections when you measure from the tops to the bottoms, and that's taken 3 months to get there. But essentially, it's just gone straight up from that point, from that low to where we currently sit. As I've pointed out many times, I don't think it pays to be fearful in a bull market, but that's what the analysts do. They keep trying to short markets. Let's just stick to the data here. What does this mean? So S&P 500 overbought on every time frame. One of the most overbought markets since 1920. We can go back to roughly 2015, 2016 when there was that top in play, and then there was the correction in 2015 and 2018 as well for the S&P 500. They look very, very tiny on the chart there, but I guarantee you at the time it was like the world was caving in because of the move that had happened since 2009. So 6 years up with a couple of bumps along the way in 2010 and 2011. There was the fat finger day in 2010. 2011, there was another correction there. Essentially, 2015 felt like it was the end of the world again, that the market had to collapse. And of course, it didn't. So anyway, we're looking at the overbought times. You got another one back here in the late 90s. But guess what happened from that point? Market kept going up for several years. Sure, it was a blow off top. Sure, and there was a major correction from that point. In the case of the NASDAQ, went down 80-ish%, the S&P about 50%, but the market also went up for several years, hundreds of a percent into that peak with these signals still happening. So the minimum RSI across all timeframes, looking at all of these numbers here, basically going back to some of these other moves in the 50s and 60s. Yes, corrections happen again, but there were still moves to higher prices. And then again, it just says one of the most overbought conditions since 1920. We all know what happened there. Another extremely big blow off top move. So basically overbought on all time frames, and it just kept going for days on end, and then it comes to an end. So essentially, it seems like things are lining up now with our, well, they've been lining up all along with the 18.6 year cycle. But in terms of the winner's curse phase, we're definitely into that point where you can see markets continuing up against all data. Why should it keep going up? It's all overbought. Well, it's shown through history that it can keep happening in each of these very significant blow-off top moves. 1920s, 1990s into the dot-com bust, and it happened for years on end. Will it happen again? Obviously, what do I know? I'm just looking at the data here at these blow-off top stages. This takes a look at the monthly returns. July is playing ball at the moment, going a little bit beyond these average returns. But then you get something like August and September. Again, I don't want to try and call a top, but just looking at the data here, August might not be the greatest return month. It's still a positive month, 0.3%. September is down 2.3%, and that might continue to line up with the election coming up in November. So you start to see a move on, and then later in November you get that big charge to the upside, finishing off the quarter. So quarter four, your Christmas rally or Halloween effect, where the market starts to get bought up after Halloween, which obviously lines up with the election being the first week of November. And the second point I talked about in the intro was the breadth. So the breadth of the market. We're seeing now smaller cap stocks push higher. And again, this is part of the small caps lagging the large caps. So the small caps are things like the Russell 2000. I'll get to that in a moment, but essentially going from the low here, roughly 2,000 points, now to 2260, so 2,260 points. Pretty significant move in the last few days, for around 12% in the last week, which has reset this divergence. So this is the advanced decline line. So essentially everyone was, analysts were getting concerned that the market needed to have some sort of correction because you're getting a big divergence between stocks that were hitting new highs and other stocks that were not hitting new highs. Typically you'd see those majors come down, or in a less chance of the smaller stocks coming up to meet some of those gains. In this case, we've seen the laggards come up. They've lagged for many, many months, going back to the beginning of this year. Essentially took all that time there, it didn't go anywhere, whereas, from the S&P 500, it's up now 20 odd percent. There you go, 18.5% from roughly the beginning of the year. So roughly about there. Okay, so you can see things are starting to catch up. It's all moving into, or already in, the winner's curse phase. Basically everything coming up together, the blow off top. We may get some corrections, but I'm going to be the first to not try and call any particular tops. I'd rather just continue to ride the trend and not be some sort of hero that we know shorts every single top, and the market basically keeps going higher than them. You know the people I'm talking about, shorting Bitcoin as it broke through 30K, shorting Nvidia as it broke through into much higher numbers, shorting anything they think they can, and then essentially trying to double down on those particular calls. What happens with the Russell 2000 when it's up 1% for 4 consecutive days since 1979, when the index started trading? This happened only 13 other times. A year later, higher 11 out of the 13 and up 25%. So we've seen this now. So this is the Russell 2000 up, you got 1%, then another, at least more than 1%, another percent, another percent, another percent. So obviously there's 3% there. But what this is saying is in a year from now, typically this market would be higher by about 25%, possibly from that low. So let's have a look from the low and then from where that signal is called. So 25% takes it to 2,500 points, to a new all-time high for the bottom 2,000 stocks, your Russell 2000. So that's the previous old all-time high. Now, if it's from the signal day, which I suspect it is, 1, 2, 3, 4 days, you would see 25% at about 2,700 points. So obviously another new all-time high there. Still pretty significant moves to the upside, and that would probably all be part of the bull market, everything bubble, blow off top. Good news on that particular data there. What else we're seeing around the world? Well, we've got the People's Bank of China pumping more liquidity into the market. They might be on their 12-month cycle of moving more money in and out and so on and so forth. About 100 billion this week. Here is the news headline: People's Bank of China cash injection spikes amid tax payment, yada yada. Basically seeing a little more money in China, and their stock market has been putting in a nice balanced correction and also heading higher as well. Let's look at the US again. Interest rates. I checked this out this morning. 2 weeks to go until the meeting at the end of the month. Pause is still on the cards. after the masses were all hoping for cuts throughout the year. You can see right there, 93% chance of a pause for US interest rates, and then cuts almost every other meeting. I dare say that this is going to turn into a cut and then turn into a cut. They're all hopeful of these cuts every single meeting leading into next year. Let's see what happens this time, because throughout this year, the market has hoped or expected a cut. It doesn't happen. As the date gets closer to the meeting, then these probabilities start to shift to the right. And in the right column here, the furthest right column, this is the pause, because this is where the current interest rate is. So end of the month, looking for a pause. September, almost everyone believes that there's going to be, well, everyone believes there's going to be a cut. It just depends on whether you think there's going to be one cut or a double cut here, basically 0.25% or 0.5%. Even if there is, I am not sure that this is going to help anyone. The market would probably have some sort of volatility into the cut, and then more money starts to find its way into the system, into the markets, pushing the markets higher. So some early volatility, maybe to the downside. Markets go higher later. If there is that cut, if there's not the cut, well then things just progress as they do. Markets continue higher until the end of the cycle. So not overly worried here. S&P 500 update, new all-time high. Can you believe it? Another day of new all-time high prices. We have gone many days with a new all-time high. So since this day here, the 3rd of July, so 2 weeks now, every day new all-time high, but only yesterday's day we got a new all-time high daily close. Oh, and the day before. As for the NASDAQ, it had a lower day, putting in a lower swing top. Still haven't broken the lower swing bottom here, but there is still time for that to happen too. Essentially, you're seeing some of the tech stocks having a pullback, which is putting pressure on the NASDAQ futures. But this has had a very, very significant run. So maybe this is the time that at least the NASDAQ is having a bit of a cool off here. So it's been underneath the old all-time high for coming up to 6 days now. As for the Dow Jones, which was the lagging index, it is finally having its breakout moment. Yesterday going on 1.77% run to the upside, fresh new all-time high. So quite convincing now on the breakout. Couple of days close above here, and in the early hours got another close above for the Dow Jones, or another daily high. Australia, massive move yesterday to the upside, another 0.8%, pushing to 870 points today, actually. So yesterday was the red day, today is the green day, pushing higher very, very early in the session. And as we've pointed out through other markets, Canada, new all-time highs. India, new all-time highs. Japan, holding off here for a moment, but still above their 34-year high. China, coming back again when everyone thought they were dead and it was over. They're coming back above their 50% level. So things are heading higher. Doesn't mean it's all going to end well. It just means that we're probably all going to go into a nice big blow off top. Gold, new all-time high. Guys, what did we talk about 2 years ago, looking at the big blow-off move that is coming, which is now, which is the winner's curse phase, when the masses were all looking at recessions. They were looking at reasons why the market had to correct. And I bring this up again now because what's probably happening is that a lot of these signals that were once bearish are all starting to become bullish. And as all of these signals become bullish, that makes a lot of investors feel like the market is safer to enter because they want to enter when things sound good. It's basically the sheep. And so many of these signals that were once, say in 22 and early 2023, that were showing signs of why things should still be fearful, why there should still be a recession, why the markets shouldn't go up, are now all starting to flip to the bullish side. That's going to take time, maybe another 6, 12, 18 months. We'll continue to follow as we do here on the channel, which is why I suggest you hit the like and subscribe button if you're new here. 3 out of 10 of you haven't hit that yet. So basically, once they do flip into that side, that's probably a good sign that we're going to see the peak near the peak or very, very soon to it, which is probably a good time to start getting out of the market when everyone else becomes comfortable with where these markets are going to the upside. As I said earlier in the video, we've got the sale coming up next week. Link in the top of the video description, get your name on the email list and you'll be notified when that goes live for our 3-part Financial Freedom Masterclass within TIA Premium. All the members have got access to that now, and so we're going to do a sale for you guys if you aren't a TIA Premium member yet to get on board with that. So check that out, link down below. Cryptocurrency time, the greed that's come back into the market again after the last couple of days. This thing's just shot straight up, 65 yesterday and now 69. 69 on the Fear and Greed Index. So back well and truly into that greed reading here, which is also showing up for Bitcoin, pushing higher, 23% from the low. On the way up, the interesting thing here is that Bitcoin broke out of our very specific downtrend. So I'm not changing the diagonal to curve fit anything. It's literally from the exact top to the next exact top. Now you can change the tops along the way, but you're not trying to just move it slightly down to fit within any of the other lines further down on the chart, because I actually really want to see whether it's able to get above those lines decisively and come back and check it. Look at it here. It came right back and checked almost dead on that line, just a few bucks off, and then took off again. We had an intraday check of the 50% level and has now continued to climb, touching 66,000 for the first time since June 20th, so nearly a month ago. From this point forward, you've got the 50% at 62,000. Moving up to the daily chart here, you've got a level under 67K, which was one of our previous resistance zones, another interesting level for Bitcoin to overcome. And then, of course, the previous old all-time high in November 21 is 69. And then getting back to these peaks here at $72,000. Nonetheless, I think as these days go on, more and more volume, higher closes on the daily, continues to confirm that the 53.5K was the low. As I looked at 3 months ago, Bitcoin 53K crash after halving, and then looking at how to pick some of those strong cryptos. Bitcoin 30% crash. Look, we had a 27.5% crash. You can spare me the 2.5%, or you can say I was completely wrong and nothing to look at here. Let's have a look at Bitcoin on the longer term here. First thing I want to look at are these gaps. This has been another big story for Bitcoin, or at least over on X. A gap does not need to be filled. You can quote me, put that in the comments section down below. Going back over history just to prove the point, because this is what it's about, right? Studying the past to forecast the future, or at least put the probabilities on your side into the future. This is not a great strategy just to hope that the gaps get filled. Of course they can, but when you've got a strong trending market, very strong, you typically won't see these gaps get filled. Look at the low here in March. There is a gap, did not get filled. That was the banking crisis. So the move out of the banking crisis was a very strong move. Gap did not get filled. Now, to the downside, while it was in a bear market, the gap did not get filled. Now, I'm looking at gaps the way I analyze. You can analyze how you want. Two ways to do it. Go from the close to the high of the next bar, or you can go from the low to the high, or high to the low. Okay, but I like to use the close as well, because that shows that basically it's been sold off before it got to yesterday's or the previous close where the gap was formed. So there's a gap there on this bear market, not filled. You got another gap to the downside, another gap to the downside. Again, gap to the downside, wasn't filled until the peak in October. So if you're trying to trade that gap, I mean, good luck. And the whole point of having a trading signal is to be able to trade it. And I don't see this as a very tradable gap. The way I would look to trade it is if these gaps are not getting filled in the bull market, in this case, they're not getting filled to the downside, that is a signal to say just how strong the market is, and that you're probably not bullish enough. If you're getting these gaps that aren't getting filled, you're not bullish enough. And you can see it all the way back here as well. So that's a quick look at the gaps. Longer term timeframes, blow off top territories. I'm on the monthly chart here. Throughout this entire history, Bitcoin rarely, and it's been a very odd occasion in the case of COVID, would break the monthly swing bottoms. This is specifically the Gann swing indicator. If you know how to create your swings, great, but there are specific rules to this, which is how this has been developed. It's Gann analysis. Now, when the monthly swing bottom starts breaking down, or you see it get broken, typically end of the game. If you see it getting broken to the upside, so you can see all of these swing tops here, 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 get broken, probably a good sign that the bear market is over and you're going to go into a bull. Same thing in reverse. Breakdown, probably the bull market's over and the bear market's on. Sometimes it's very, very late. So that's why you need other signals and rules. But it's a good rule to have as a major or macro look at the market. I'm not saying that's the only thing you should have, but it's a pretty strong sign, especially out of those lows, which is what I used in January 2023. You guys remember that from the channel. When this monthly broke, it was a pretty strong sign that we were about to go into a major bull market. And of course, well, the rest is history from that point. We had a bit of time to consolidate and to accumulate. And then we got the higher low form and the banking crisis. That was just like one of the best signals that we could have ever had. So that's why I put so much emphasis on this swing chart. So in the bull markets, the only time it's broken down, the monthly swing bottom, was the COVID crash. But then look at this subtle difference here. Closed above that previous swing low very, very quickly. Same deal with this cycle here. This one's just only on some charts, not on all of the exchanges where you had August breakdown. Otherwise, the monthly swing bottom wasn't broken. And again, previous cycle, monthly swing bottom was not broken. Now, this is where it gets interesting with the blow-off top move. The quarterly chart was not broken. Again, this is a different exchange here. This is crypto. If you look at the exchanges, August didn't necessarily break that January low. Nonetheless, putting that aside, you can see that there was one swing in the quarterly, no more pullbacks in the quarterly swing. Sure, there's going to be 20, 30, whatever % corrections, but you only had one swing low in the quarterly, blow off top. Here is your blow off, here's your secondary, market collapse. There's your blow off, come back to the previous cycle to that, 2013, nice big blow off. You had like 2 blow off moves here and only one quarterly swing. Market cycle started somewhere around 2010, market swing bottom there a year and a bit later, and then blow off top from that point. Now you can count the number of quarters into that top, and it's probably somewhere around 4 to 6 quarters now. So from the low to where we to the peak, 12 quarters in total, and right now we're into our 7th quarter. So we've done about half of them already. We're into that, just into that 7th quarter. Now, if we take it out to 12, again, that takes us somewhere around the second half of 2025. I've mentioned many times before, probably best to keep a couple of other time frames earlier on, quarter 4, quarter 1 of 2025, so quarter 4, 2024, quarter 1, 2025, just in case that Bitcoin or cryptos have their blow-off move now, and then the rest of that interest continues to flow over to stocks and real estate again. I'm keeping an open mind there. Just keep following swing chart. That's how we have stayed on the right side of the market this long. But yeah, looking into this blow-off peak move, probably in each of the occasions we've seen a blow-off move to the peak, whether it was slightly earlier like 2021, or if it was the final blow-off moves like in 2017. That is yet to be seen. What has happened is that there hasn't been a quarterly corrective move that has put a swing in that chart. So blow-off move seems almost confirmed. ETH, similar sort of thing, blow-off move. This was the bear market right here. Again, you had the new cycle to the peak, one correction on the quarterly swing, big blow-off move. There was basically no time to breathe after that, it just went straight up. We had the May pullback and then straight up again. We've had one pullback here, but this was a much shorter bear market for Ethereum because the rest of the market bottomed in this quarter. So if we take it that, well, we've still got one swing in the quarterly and that this might not get a swing bottom, this could be that blow-off move like in 2020 to 2021 and also basically all of 2017 that led just into the early stages of January 2018 and then the correction from there. So if that's the case, you've got about 5 quarters starting from now, about 5 quarters, could be 4, could be 6, okay? But starting from now, where you might just see things go somewhat parabolic. I don't want to get too hopium-ish here because I want to stay conservative, level-headed. But yeah, and we've only got 2 data points to go from with Ethereum anyway. But yeah, once things start to get past their breakout, their all-time highs, well, there's been already 2 accumulation periods for major cryptos. And if you're going to miss out on those stages, well, I don't know when you're going to get in. And the next stages to get in would probably be the highest risk stages because you're in these very, very fast moves. And the main question that comes up at that stage, and I start to see it in my comment section, is when do I get in because there are no pullbacks? And that leads to some pretty dire moves in the market. People make really stupid decisions when that happens. When you've got the time, now is the best thing to have your plan ready to go. Solana, similar sort of thing. You can see you've got the market going straight up. Again, it's a much younger market, so you might not get these swings in it. The thing I'm looking at here are the red quarters. So you can see along the way to the peak, there was one red quarter, and this started a little later in the cycle. It only came out in 2020, whereas the bottom was in 2018. So far, we've had 2 red quarters for Solana. Ethereum in the past, into the big bull market tops, only had 2 red quarters in the previous cycle and 1 red quarter in the cycle before that when it was all shiny and new. And for Bitcoin, it had 3 red quarters into the peak, another 4 red quarters into the peak, and the cycle before that was only 2 red quarters. So you're starting to see a few more red quarters as the market progresses, right? This cycle so far, we've seen 2 red quarters. So it could be 1 more red quarter to come up for Bitcoin, maybe 2, just looking at only these last few data points. And on the other hand, it doesn't mean that we have to have any more significant red quarters. There could be 1, there might not be any others. So after this point, breakouts leading into this Q4 of 2024 and then into 2025, I think we are on for some big moves. Dare I say, big blow off top moves. Like and subscribe. I'll see you guys at the next video. I hope you're having a fantastic time. I'm going to go grab some waves now, and I'll see you back here real soon. Take care. Peace out.